Hello, folks. This is Raj Sastry from Raj Option Trading. Today, I want to talk about a stock called ACADIA Pharmaceuticals. It's in the biotechnology market, and this company is into global central nervous system market. They help with the central nervous system issues. So, with that, let's go into a little more deep dive. Um, the global biotechnology market, it's expected to grow at the rate of compounded annual growth of 15.83%, which is a very good growth trajectory. And this company, Acadia Pharmaceuticals, it's into central nervous system related issues. And for this, the compound annual growth is 7.4%, so which is a good compound annual growth. It's according to Grandview Research. So I feel good about these type of pharmaceutical companies because they have a novel cause and they want to really make sure some of these deadly diseases like Parkinson's, dementia, these type of diseases, they're trying to look for a cure, and it's not always easy because there are a lot of things you have to do, and there are setbacks through approvals and regulations. So these folks are really working super hard. So with that, let's go into the profile of this company. So Acadia Pharmaceuticals, they are into the development commercialization of small molecule drugs to address unmet needs in central nervous system. It's also called CNS, and they already have product called Noop Nuplazid, and this is used for the treatment of hallucinations and delusions, with Parkinson's disease. And they also developed and commercialized uh, first and only approved therapy, which is a good thing. And they're also working on a late stage development focused on dementia related issues. And I think they're working very hard on this. And in addition, they're also looking at other areas like pain management, cognition, around the central nervous system disorders. So overall, I feel this company is really working hard on three things. One is the hallucinations, Parkinson's disease, one category. Second category is dementia. Third category is really the pain management and cognition and neuropsychiatric symptoms. So I think these are really a lot of unmet needs in the market, and these folks are really working very hard. So with that, if you look at the stock chart here, as you can see here, this stock goes up and down quite a lot. Sudden up here, down, up, down, up, big drop. This is because of the FDA, asking for more. They're inquiring more about their new dementia-related drug. So I think that's why it dropped a lot. And if you look at their revenue growth, it's around 23% year over year from quarterly basis. And they also have good amount of cash. They got $631 million cash on the balance sheet. They can weather some of these setbacks, and they have some debt which is not much at all, very very much manageable, and they are right now not making profit. They have negative operating cash and negative free cash flow. So, and the CEO here, Stephen Davis, he's got 88% approval rate from the employees, which is a very good thing. It's I think he's doing a good job there. Stock price is $27 and market cap is 4.33 billion. And CEO here, Stephen Davis, he has served as CEO since 2015, and he, before that, he was a executive vice president, chief financial officer. So he was there for a long time. He's got 25 years of pharma experience. So I think he's got good experience in this industry, and he can really help the company to weather this storm. And if you look at the headline news here, Acadia Pharmaceutical stock price cut to 37 from 55, from this analyst. and they also have some investigation into potential securities violations, because stock price dropped a lot and there are some insiders who sold maybe a month or so before. So there's some investigations going on. And the third one, on March 9th, shares dropped 47% after the FDA approval. And FDA is really asking for a little more information here. So that's why people were expecting there will be approval, but they're asking for some more information. The company is working with the FDA to provide the information. So we'll see how it goes. So with that, let's go into a little more details. I want to just quickly provide a quick overview of the competitors here. We got a lot of competitors, as you can see here, starting from Lexicon here, which performed 255% during 1 year, and it's in the descending order of priority here. And we got companies like TRVN, Trevena, Endo. Some of these are, I trade these companies a lot and buy them. These are very good companies. The trick for these companies is to buy when they're down a lot, something like this year with the ACADIA. It's got, stock dropped on a weekly basis 44%. And now on a 1 year basis 23% down. These are the good opportunities. You got to be a contrarian to really invest in these type of stocks. Companies are really, they are purpose driven. They want to really find out a cure for these unmet type needs, which is always good. And if I quickly some point out a couple of stocks I always like. And Endo is good one. Sage also I trade a lot. Sangmo used to be very hot stock a while ago. KRTX again a good one. Many of these NBIX, Neurocrine, many of these are really good stocks. Even BIIB, these guys, Biogen is also known for these setbacks once in a while. Stock, takes a huge drop, and they slowly recover. Because these guys are also working on dementia. So, that's just a quick snapshot of some of these companies. We can cover them in a different, setting. And now we'll go into ACADIA a little more detail. From a fundamental perspective, if you look at this chart here, the way this chart is organized, we got quarters. For ACADIA, the quarter aligns with the calendar quarters. 12/31, which is December, September, June, March, so on and so forth. We got a couple quarters here to look at. And from a market cap perspective, market cap, really, kind of, going, it's in the stable path so far, 6 billion, 6 billion, 7 billion, somewhere around that time frame range. And 12/31, it was 8.50 billion. Now with this huge drop, it took a beating. It's around 4 billion, which is cut in half almost. From a revenue perspective, there have been there is a good revenue acceleration, as you can see here. 62, 83, 94, 98, a little bit drop here, picked up again. So there is a good acceleration. And from a year-over-year revenue perspective, there is a good growth here, 23%, 27%, a good level of growth here. They used to grow even more earlier, but now it's kind of stable around 20 to 30% range. And they have been surprising Wall Street with their positive revenue surprises many times. But this time around, when they announced, it's a negative surprise. So that's why stock tanked a little bit. And then the news about FDA asking for more information, it dropped again. EPS perspective, there have been the positive surprise in 12/31, and as you can see, some negative surprises and mostly positive surprises. And gross margins very very respectable. I like this gross margin, very nice. Net margin is negative, indicating they're still not making money, still not profitable, and they do have good amount of cash in their balance sheet. They can weather these small setbacks or even little bigger setbacks. They don't have too much debt, like we talked about, a little manageable debt level, and price to sales ratio. It's not bad. It's 80. It was 18 back on 12/31. Now with the price drop, I would think it'll be even lower. And P ratio is not meaningful for this company because it's still losing money. Earnings per share, they're still losing money. That's why earnings per share is negative. And shares outstanding itself, it's consistent, no red flags here. Overall, I feel like it's a good company. They're in this industry, pharmaceutical industry, and some setbacks like this, it is expected. So that's why we see a huge drop here. Overall, I feel good about fundamentals here. Next, let's look at the earnings transcript itself and what management is saying. So management is basically talking about they are making a lot of good progress in three pillars. One is Parkinson's, second one is dementia, third one is really the next wave of breakthrough. In things like pain management, around the central nervous system. And for the full year, their flagship product, Nuplazid, it did 30% year over year. From a revenue sales perspective, which is a good story. They know how to really look at a product and make sure and nurture the product and grow the product. And they also since launching in 2016, this product Nuplazid, which is for Parkinson's disease, it really had a consistent linear growth, which is a good story. They know how to grow a product. And they're also looking, they've submitted SNDA DRP. It's basically, this is where they want this dementia treatment. And I think this is what got FDA is asking for more information, and they are making some progress on this phase 3 program around schizophrenia. I think it's one more indication they're working on. And they also acquired this company here, which is really very good around pain medication and program. And from a earnings and revenue perspective, from a sales perspective, they did 23% increase, which is very good. Overall, the volume growth is also good, up, it's 12%. And the P&L, their R&D expenses really increased. Mainly they're working on multiple indications, as you can see here, including the dementia, and treatment around this multiple indications here. And with that, it's expected, for 2020 they recorded 441.8 million net sales, good 30% increase. From a business outlook, this is what very important. They expect continued growth from their Nuplazid, which is the Parkinson's indication, which is good. I mean, it's their steady Eddie type product. They're doing good with this product. And they're also working on this FDA approval that we talked about for dementia. We'll see how it goes. And also, they're also thinking there will be 20% growth in the PDP revenues, which is a good growth. And they're also expecting the R&D expense itself will be between 300 and 320, given they're working on multiple indications, 5 indications, which is understandable. So overall, after this announcement they've done, we have a news that their indication for dementia. That's where FDA is asking for more information. That's the setback. That's why stock tanked big time. Now let's go into a little more details, and for this let's start looking at their performance on a historic basis and see what they've done and what we can glean from their performance. This chart talks about their performance on a yearly basis, right from 2004 all the way to 2021. So this year, as you can see, it's a negative performance, 49%. Most of this is last week's drop of about 45% or so, and they did very well in 2020 and 2019. A big drop again 2018, about similar magnitude, and some drop in 2016, drop again 2011, 2010, 91% drop back in 2018. At that time, I think, as you can see, your stock price was not much. In a nutshell, for this company, a drop of the magnitude of 49% is it's not unheard of. We have seen it in the past, not a huge deal. Now let's look at monthly performance. On a monthly basis, the last week, I think the stock dropped. Last, this month, March, stock dropped big time, 44.78, and there's some drop back in January and December, and they got some drop. As you can see here, July. March is their earnings. If you look at the March back in 2020, they did not drop much. So that gives you an idea. This stock, kind of drops, at times and bounces back. As you can see here, it bounced back. Now let's look at weekly performance. From a weekly performance, you know, here around this week here, I think this is where they did the earnings and stock dropped a little bit because they missed on the earnings. And if you look at here, the stock, last week, stock dropped 44%, mainly because of the FDA setback. So we'll see how it goes. Next, we'll look at daily performance. One is the earnings on 24th. After the earnings, it dropped a little bit and dropped again the following day. And now on 9th March, due to FDA setback, huge drop, 45.35% drop. And after that, I think it kind of tried to bounce back a little bit. As you can see here, next day bounced back 7%. And 11th March, a little bit drop. 12th March, there's again one more bounce back. I feel it may be trying to make a base and slowly trying to make a comeback, but still they're submitting revised, they're providing more information to FDA, and we'll see how it goes. It'll take some time. Now let's turn our attention to a monthly performance. The way this chart is organized is we got years on the top, 2021, 2020, and whatnot. We got yearly performance, yearly high, yearly low, and we got all the months here. The months in background, green background, they are the quarter end for this company. So, we can kind of try to make sense out of the quarter and try to make some sense out of any pattern that we might see here. So main thing I want to talk about is really March, huge drop, 2020 March, because they announced earnings for in the quarter ending December last year. And as we glean through this year, there's a huge drop in July, August here. They bounced back, huge 10% drop, bounced back again, huge drop here. 2018 was 46% drop for the entire year, which is a little bit lesser than what they did this year so far. The point I'm making is, even though they dropped 46% in 2018, they bounced back in 2019 and 2020. And same story if you look at 2017 drop, and they picked up again. They dropped again in 2018. 2016, same story, 19% drop. So this company, as you can see here, it's both red and green. So, which is understandable for these type of pharmaceutical companies. I feel like hey, they got their drop this year. From this point onwards, probably they'll start making a base And as they provide more information to FDA, we will know if they can bounce off of this pretty fast or will it take some more time. Now let's go into some more details, mainly on the technical side. So if you look at the stock chart, this is an 18-month stock chart from TD Ameritrade Thinkorswim. As you can see here, there's a huge drop here, mainly because of the FDA approval. Um, and stock kind of broke below the 200-day um, moving average also. So I think it's a big drop. And if you look at RSI itself, even the RSI dropped big time. Whenever RSI drops too much, it shows it's a oversold type indication. There is a tendency for this stock to go up. For example, here when they dropped off, RSI came down. From there, it tried to make a base and go up again. And it happened again over here. RSI stock dropped, RSI dropped, kind of tried to make a base, trying to go up again. So it's a pattern. I would think we can be contrarian here. Buy a little bit, keep it for a long time and take it from there. And one thing I want to look at is really the implied volatility. So as you can see here, the implied vol, kind of went up, shot up heavily. So right now, IV rank is 93.5%. So I would not be a buyer of options here. If you buy option, basically implied volatility is working against you. There is a lot of theta decay. I would not be a buyer of option. But you can buy the stock itself, to be a contrarian and take it from there. And if you look at the DMI itself, which is again another technical indicator, it's understandable. Stock had a huge drop. That's why the blue line here, came all the way down. Red line went up, and even the ADX, also went up. It's very typical. The punchline is really when the stock drops a lot, the chart looks so ugly. You got to have the contrarian approach. If you want to buy some, that's the best time to buy. And from a chocolate money flow perspective, from an on the balance volume perspective, I think on the balance volume dropped. Now it's trying to pick up a little bit, which is a good sign. And chocolate money flow perspective, I see that smart money is trying to make a small bet here. It's kind of trying to go up a little bit. So I think there are people who want to be contrarians and buy some and keep the stock for a long time. Now let's look at a little bit smaller term, indicators, smaller time frame, and see what we see. This is a 10-day, 1-hour chart of ACADIA Pharmaceuticals. So as you can see, there is a huge drop here after the news broke out. After that, stock try to bounce back a little bit, and now it's stabilizing, as you can see here. And the nearer term, I think it's a 10-period moving average, trying to see if it can go above a 20-period moving average. So we'll see how it goes. At least it's trying to make a base here. And RSI, as you can see here, kind of trying to stabilize a little bit in the 30% range, which also tells me it's trying to stabilize a little bit after the huge drop. Implied vol, we talked about this already. It's high, not a good time to buy option itself. From a DMI perspective, again, right now, after the huge drop here, the red line, shot up, showing bearish sign, and now it's trying to stabilize a little bit and go a little down. And moving to the on the balance volume, it dropped a lot. Now it's stabilizing. People are now buying the stock itself, which is a good sign. Chocolate money flow itself, it's kind of after the drop, people bought a lot of stock. Now it's kind of flat to lower. So overall, from a technical perspective, by looking at the chart, I feel it's trying to make a base here, and there are folks who are contrarians. They're trying to buy the stock and really wait out this whole FDA inquiry and see how it goes. Now let's go into a little bit, what options are telling us about this stock here. This stock, so this is about 16th April. It's about 30 days out or so. What it tells is really um, 30 strike. Right now, stock is at 27. The 30 strike call. There is a lot of volume here. As you can see here, there's a volume of 516 contracts, open interest of 341 contracts. So, people are trying to buy call options. They feel the stock will easily go above 30 by April 16th. So it kind of tells me, people are a little bit trying to be bullish here, be contrarian, and buy 30 strike call option, even though stock price is at 27 right now. And there are some people, they're buying deep in the money options here. As you can see here, strike price 25, deep in the money, options. If stock goes up a lot, you make good amount of money because it's a deep in the money 25 strike price call option here. And there are some people who are also, buying put options. As you can see here, there is 904 volume for the put option here. There are some folks thinking, hey, you know what? I don't want to short the stock, but let me buy some put option. It's really not too much price to pay. So some folks are buying some put option. Maybe they have the stock and they want to protect the downside for their stock by buying put option here. And if you go a little bit outside into 18th June, it's around 96 day or so out. Same story here. People are buying 30 strike options here. They're hoping stock will go above 30 by this time. And from a put option perspective, if you look at the wall here, I mean nothing significant. There are some folks who there's some open interest for the 25 strike put option. Maybe the folks who have already bought the stock itself, or probably speculator. There's some interest here for the 25 strike put option. So that's the nutshell. Overall, I feel people are buying call options, people are buying stock. They want to take this as an opportunity and be contrarian. Now let's look at option statistics and see what it tells. This is option statistics for ACADIA Pharmaceuticals as of March 14th, which is today, but it shows the statistics for last Friday. So call volume increased, as you can see here, 3113. That tells me there are a lot of folks who are bullish on the stock at this point, especially given stock has dropped a lot. And put volume, it's a little bit less comparatively, I would say very less. And put call ratio is very less, it's 0.20. So what this tells me is really people are more bullish about the stock at this point and buying more call options, and the bearish folks who are buying the put option, it's a little bit less. So overall sentiment is toward the bullishness. That's why there is more call options being bought at this point. I feel pretty good about this here. At times I would be a contrarian, not with the huge amount of money, but at least invest some money, be contrarian. It will pay off if the stock bounces back, if there is a positive response from FDA. Now let's turn our attention to insider trading. So this is one thing, there is a lawsuit on this company. Maybe some of these insiders, like this Kim Austin, EVP, exec vice president, and the president, and CEO himself, Davis, and the EVP and CFO, they did a sale, and as you can see here, this president sold about $426,000 value, and CEO himself sold around $718,000 value. It's in $1,000. So I think these folks are at least we don't know at this point. I mean, the folks who filed the lawsuit, they are thinking maybe these guys knew something about it, But I would not worry too much about it. As you can see from the history, these folks have sold in the past also. They've sold lot more in January, and they've been selling at times, because these guys, especially this company, it gives a lot of stock options to these execs, and that's one of their way of compensating and motivating the employees and the execs. So I would not read too much into it, given the value is so less. If they are sold maybe $10 million worth, I would be worried a little bit. But this looks like the regular sale from the execs, not a huge deal. Now let's turn our attention to, hey, what should we do now? The stock dropped a lot. The reason stock dropped a lot is the FDA requested additional information on the statistical methods used to determine the efficacy of the product. Really, FDA is looking at consumers and patients, and they really want to make sure this drug, for dementia related issues, it can really help these people. That's why they're asking for more information, which is very valid. And folks are questioning why they ask this information late in the game versus asking earlier. So we'll know more as the company provides more information. And stock drops 45% on March 9th. That shaved more than $3 billion from its market cap. That's huge. But it's understandable. Some of these FDA approvals, people really, they were so bullish before, but the news drops and they kind of become bearish, which is understandable. And Acadia also, they estimate the addressable market for this new indication they're working on is 10x larger than the current Nuplazid, their Parkinson's disease indication. So that's why there is a hype on this drug that it can be 10x more than their existing stable linear growth drug that they already have. So if you see here, this new Placid generated 442 million in 2020. If you do 10x, I mean that's going to be about $4 billion. So that's why there's a big expectation about this new dementia indication. So I feel the market has overreacted, because there is a lot of hype around this drug and its market opportunity. At least I want to be a contrarian at this point. I would, buy some Acadia Pharmaceuticals and keep it for a while. Even if even if it might take a while for them to respond back to FDA. I think it's worth it. I've seen the same story with the Biogen in the past. Stock drops a lot, then they kind of recover as as time progresses. I feel it's a buying opportunity, and make your judgment and see what can be done. Happy investing. Thank you.